Mr. Duggal, it's great to have you on the show. Thanks very much for taking out the time. Now, recent data points suggest that the government's rural push, good monsoons and higher MSPs, green shoots are pretty much visible for a sustainable and strong revival in rural demand. Do you concur with that?
We are seeing early signs of rural revival happening, and we do expect, as you said, this would perhaps accelerate in the next 4 to 5 quarters leading into the election. So we are depending a lot upon rural recovery. We believe it will happen, and the early signs of that is now visible.
Right. Mr. Duggal, hi, good morning. You know, rural markets in particular are contributing a good 50% to your domestic revenues.
Good morning.
And that really has been a key area of focus for you. But
Yes.
when is it that we can see you achieve double-digit revenue from there? Just the rural markets.
Well, in the second quarter, we did double-digit growth in rural. It was considerably ahead of urban. And I think rural will continue to outpace urban for the next 3 to 4 quarters, maybe a little bit longer than that. So I think the demand is going to be sustained. How high the demand will it be? Will it continue to trend in double digits, or will it sort of taper down a little bit? It certainly is going to be much better than what we saw in the last few quarters, barring the previous one. So I think the effects of demonetization and GST are now behind us in the urban economy. The higher levels of stimulus which the government is putting it through the DBT pipelines, etc., are now yielding results. Leading into the elections, we should see further acceleration of the stimulus by way of the MSPs, etc., etc. And I think that will fuel rural demand for staples, perhaps significantly so. We've seen that 4 years ago or 5 years ago during the previous elections, and that is typical of what the trend is.
Right. Give us a sense, sir, do you think spending patterns are picking up in the rural economy? And if you could give us some benchmarks there, because, everything boils down to the per capita income in the Indian economy. So, we can talk about reforms and we can talk about, jobs being created or perhaps there being a need for more jobs, in the rural economy. All of those debates can carry on, but it really boils down to, the lifestyle that people have in India, as also their purchasing power and the per capita income. So where do things stand on that front?
We don't have hard data. It normally comes with a lag, so perhaps we'll have some visibility about how high the incomes are trending up in the rural sector perhaps next month. But you're absolutely right. The key metric here for consumption of staples is the disposable household income in rural India. And when that goes up even perhaps by a small amount, we do see a considerable upsurge in the consumption of staples. Because a small uptick may not trend into consumption in terms of higher value products, autos or two-wheelers, etc., or appliances. But certainly the impact on staples is visible. Also, I think we are just not depending upon the likelihood of rural recovery. We are also investing substantially in terms of building our rural infrastructure. We started this process around the fourth quarter of last year, which was a pretty stress period in terms of our business, just post demonetization, etc., with the GST about to happen. But we did predicate that rural recovery will happen, and we said let's build infrastructure in terms of putting more people on the ground. So we put close to 300 people in terms of building rural networks, and that did cost a lot of money, but it was worth the investment, and I think that is paying off. So even if the rural markets don't trend up as much as we would hope, we still believe that our rural growth would be ahead of urban growth. There's another thing happening is that the key feeder into the rural markets is now becoming the rural wholesale. So the urban wholesale has been the chief victim of demonetization and then particularly GST. And that was the chief feed into the rural markets, which is now being supplanted by the rural wholesaler. So that's another change which we recognized, and we have built infrastructure to support the rural wholesale, and that is paying results.
So tell me, Mr. Duggal, which segments and product categories are selling the maximum in the rural regions right now?
Mostly lower value products, lower value SKUs in personal care particularly. So you have oral care, hair care, products like these which are selling. Also products which we never really pushed into the rural markets, like a baby massage oil or the Gulabari range, or some of the consumer healthcare products, cough syrups, etc. We are now making concerted efforts to seed the rural markets with these products. So therefore there's a portfolio expansion also. The width has gone up, and that also is fueling our overall growth in the sector. We're not just relying upon the traditional big brands which were dominant in the rural, but we are putting in some of the more urban-centric brands into rural too.
One of the first few FMCG companies to take a price to pass on the lower GST rates to the consumer. This would have, of course, been a major fillip for the kind of demand that you saw from the rural economy for your products. How do you foresee this aiding volume growth going into the future? Because I remember clearly, Mr. Duggal, that you were talking about, somewhere between mid-single digits of 5 to 7% or 8% at that being the range for volume growth. Can it be pushed higher to 8 to 10% now, or even beyond 10 to 12?
Yeah, I think the base case perhaps at this point in time would be 8 to 10%. The bull case would be perhaps 10 to 12, and the bear 5 to 7. So that's the kind of range which we're looking at. But if the rural economy picks up, there's a good monsoon next year, stimulus is enhanced, I see no reason why the aggregate growth cannot trend up to double digits. There's also a favorable base both in the current quarter as well as the first quarter of next year, which will help at least optically in terms of restoring growth. But I think we'll have to see how growth trends up in the fourth quarter, which is really a normal quarter, as fourth quarter of this year, which is a normal quarter vis-a-vis last year, and that would be, I think, throw a lot of light upon how the future growth is going to be. But we are pretty hopeful that growth will happen, and it will be driven by rural.
Mr. Duggal, with most of your products lying in the low penetrated categories when it comes to fruit juices, hair oil, digestives, etc., the scope of double-digit growth in most of the categories remains on the back of expected improvement in the domestic demand environment. What I'm trying to understand is whether rural pickup is being supplemented with sustained urban growth or not.
At this point in time, no. I think there are pockets of urban which are doing well. Urban retail is doing reasonably well. Modern trade is doing well. But there are other parts like enterprise, particularly the canteen stores and army, which is trending down. Urban wholesale, as I mentioned earlier, is a big victim of GST. So that's trending down. So the urban picture is not as benign as what we are seeing in rural. So it's very volatile here. There are pockets which are doing well and pockets which are not. But rural, in a secular manner, is doing quite well.
Mr. Duggal, on some product innovations you're working on, especially in Ayurveda, because that's very linked and perhaps a favored product line within the rural economy. Does the demand continue to expand in the space, and how do you plan to make the most grab a larger market share? Actually, I also now recollect that there's a fairly big opportunity for Ayurveda products in the urban markets as well.
Yes, I think it cuts across both urban and rural. These products which we have, and we have a large number of them in our kitty, have been really underinvested in the past. We haven't really driven them through distribution or through media. And that's what we plan to do in the years ahead, that instead of launching new products, resurrect much of the products which we have in our armory and mass market them through larger levels of investment. So I think that's the theme which this company is going to play out over the next couple of years at least, is to look inwards for growth in terms of scaling up products which we have, rather than to look at completely new areas for growth.
Mr. Duggal, we're almost at the end of Q3. Tell us, how has Dabur done so far? Is it looking better than Q2? Because you also have a lower base effect on your side.
Yes, I think that would certainly make Q3 better than Q2. How much, of course, I don't know. But one should not be too seduced by the fact that good growth will happen this quarter, because it's on the back of a weak base. The challenge will be in the fourth quarter, like I mentioned earlier, and if we are able to deliver double-digit growths in the fourth quarter, that would be very indicative of the trends which lie ahead. So this quarter will definitely be better than second quarter.
All right, Mr. Duggal, we leave it at that. Thanks very much, sir, for joining us this Friday morning to give us your sense of how business is shaping up. All the very best to you, and wish you a very happy new year going ahead.